My guest market monitor this week is Mark Leibovit, Chief Market Strategist for VRTrader.com. And welcome back to Nightly Business Report, Mark.
As always, glad to be here.
On your last two visits with us, you were a strong proponent of owning gold stocks, almost exclusively gold stocks, and indeed they did very well up until recently. And I noticed that you recommended taking profits on your golds on the website last January. Tell us about your strategy regarding the golds.
Well, two-year run, Paul, a lot of bulls out there. Volume shifted to the negative. The dollar was showing signs of bottoming, plus our forecast model got us out in January. But I have to say, big picture, I'm still a bull, but short term, as we'll see in a moment.
Well, let's look at the recommendations you gave last September when you were with us. Anglo was 40 then. I know it got into the high 40s, and Hecla mining was much higher than 638 too. So those are down from where they were then, but in between, you sold. You got in there and sold them at a big profit. Like Harmony was, I think, as high as 19, and ASA Limited was, I believe, up to 49. And you sold at those prices?
Well, not at the high, but wherever they were around January 23rd.
Well, that was actually, we have the XAU annual forecast models here on the screen. And let's see, last year, this was your forecast model, showing gold peaked in the early fall, and then down a little bit toward the end of the year. And then for 2004, the forecast is still in. In January, they peaked. Is that where you sold them?
That's it. We saw this negative forecast come in. If you look at the model, it basically says, unfortunately, this is sort of the opposite of what we saw last year, and we're going to see sort of a downtrending to sideways pattern. And again, it may be attributed to strength in the dollar.
Now, this is just for the gold forecast.
Just XAU, Philadelphia Gold and Silver Index. So, you know, a lot of my bullish clients, perma-bulls in the gold, are a little upset by this forecast, but, you know, we're recognizing the market reality, and it's negative for now.
Okay, well, it doesn't going to get not too bad during the year, but definitely lower from where we are.
Gold may trade in the 370 to 420 range. 370 is still considerably lower. XAU may get down into the high 70s, low 80s. We'll have to monitor it, but the key for me is that volume is going to have to shift, and I need time to pass because the model is saying be careful.
So we mustn't forget what VR in VR.com stands for, and that's volume reversal.
Right. We need a volume reversal back to the upside. We have to show accumulation back in the golds, and I suspect until the dollar heads back down again, even though eventually I think the dollar will diverge from gold, but this is the current perception. So we're going to see probably the dollar.
So if you own the golds, you stay with them if you are patient?
Yeah, if you're a big picture holder, you know, I have this view that we're coming into or have entered a 20-year upcycle. We were down for 20 years, up for 20, but 20 is forever when you're investing. So there could be a lot of volatility. I think you should be a long-term holder, but many of my clients and people who track our work would say, well, gee, you know, there's going to be this type of decline. Let's pick them up mid-year or the end of the year.
But why are you almost exclusively following the golds? What about the rest of the market?
Well, we can talk about the rest of the market
Quickly.
if you like. Absolutely. Well, the rest of the market, you know, we have a presidential election coming up. There's a tendency for a rally into the election. There's also a tendency for a cycle low sometime between March and May. We may have seen at the end of March. That's what it appears, and we can start trending up toward the election. But
now, if we're trending up, well, how do you participate in that? Through the index funds?
Index funds, ETFs. We like the diamonds, Qs, spiders. We're in a trading range, Paul, 10,200, 10,500. My suggestion would be if you take out 10,500, you may go up to 10,008. We take out 10,002 in the Dow, you may get down to 9,800. So with those type of parameters, if you want to be in the market
But you're not saying buy the cubes or any of these at this moment?
At this moment, I might consider them because volume came into the upside yesterday, and you know, we may trade up now to the election.
But you've got to be nimble in and out.
I think it's a trading range market. You know, we have tremendous gains since last March. This is not the easy market that you had in the past year. So I think investors have to be a little bit more careful going forward.
So you're kind of sitting on the fence, but not buying a whole lot right now.
We're trading the range and looking to buy gold at the end of the year.
Okay, that's simple enough. We'll look on your website for more information about when.
At VRTrader.com.
There you go. Thanks very much, Mark.
Thank you.
My guest market monitor, Mark Leibovit, Chief Market Strategist for VRTrader.com.